alrededor de 25 participantes y esperemos algunos más. El directorio del GLENIF agradece a todos ustedes la presencia. En particular, agradecemos a Tadeu y a los miembros del staff del IASB, Aida y Nick, su buena disposición para conversar sobre estos temas que tanto interés tienen para América Latina en particular. Y simplemente les voy a mencionar en nombre de GLENIF la importancia que para nosotros tenemos en este evento. Estamos participando prácticamente todos los directores que forman parte de este grupo. Luego van a continuar conduciendo la reunión en la parte que tiene que ver con las preguntas, Felipe Pérez Cervantes de México y José Luis de Brasil. En este caso, quien les habla, Jorge Gil, actualmente presidente del directorio, Felipe vicepresidente. Y bueno, la forma en que esperamos podernos trabajar es, ellos realizarán la presentación, una presentación corta, en un tiempo prudencial de los temas que les preocupan. Luego instalamos las preguntas, que las pueden hacer en español si así lo desean. Pero bueno, lo vamos a traducir a través de Felipe o José Luis para que todos lo tengan en inglés también. Y luego seguiremos con otra parte de la presentación. Así que a todos nuevamente muchas gracias. También agradecerle en forma especial, como dijimos, a Tadeu. Welcome Tadeu, Aida, and Nick, and thank you for your support of GLENIF in this important issue. Thank you very much. Tadeu, para ti te dejo entonces la conducción a partir de ahora. Muchas gracias.
Gracias a usted, Jorge, y bienvenidos. I'll start speaking English from now on, and then my colleagues from IASB can also understand us. We have all the directors present in this presentation, this outreach, together with some other technical staff that is helping us with the questions. I think that we have already agreed with them the format of the presentation. That will be you making the presentation, then we stop for the questions and answers, and then we go for the second part, and etc. What Jorge was saying is that if people want to make a question in Spanish, that's okay. That Felipe and Jorge, José Luis from Brazil will. Felipe from Mexico and José Luis from Brazil will make the translation if necessary. And with that, the floor is yours, Aida and Nick. Thank you very much.
Thank you, Tadeu. Thank you, Jorge, for introduction and welcome. And I'm glad you said questions can be asked in Spanish. I can't answer in Spanish, but maybe we can challenge Nick on our team, who, I think is still active with Spanish lessons, even in coronavirus and lockdown, aren't you, Nick? And you have your 5 or 6 p.m. Spanish regularly. So this is your chance, guys. So Nick, are we gonna share? I mean, are we able to share slides, share screen now, and then just walk through the presentation?
Yeah, are you able to see that now?
Yeah, we can see it. So
yeah,
if
just put on presentation. There we go.
Yeah, fantastic. So we will, so as Tadeu said, we will do a quick introduction and then explanation topic by topic, and then we will pause after each topic for questions and discussion of your views on the proposals. I'm not going to go through introduction in too much detail, but just touch on a slide, next slide, slide 3. To remind us all that there is still a little bit time to finalize comment letters, but not too much. We are really hoping that your comment letters will arrive well before 30th of September, because we are trying hard to get the feedback to the board as soon as we can, and progress the board discussions afterwards. And the project is proposing to replace existing IAS-1, although the scope of the project, as we will see, doesn't exactly review everything that is in IAS-1 today. Is shown a little bit more on next slide, on slide 5, actually, what the project covers. Maybe if we look at that, so that's the proposal is that replacement of IAS-1 will cover the new proposed presentation and disclosure requirements, but then there are bits of IAS-1 that proposal is just to carry over, and we have some questions in the exposure draft around that, whether you have any concerns with that, and we are not specifically addressing that in this presentation. And then in addition to that, there are proposals for a number of amendments to IFRS standards, and we will touch on some of these today, specifically statement of cash flows and disclosures around associate and JVs in particular. So with that, I think next slide, slide 6, is quite helpful in providing overview of what this project covers. And there are really, I like to say, 3+1 topics, because the fourth is not quite as big proposal as the first 3, and all of these very much driven by the feedback we've received from investors on what are the key issues with performance reporting that they would like the board to address. So the first set of subtotal proposals relating to subtotals in the statement of profit or loss address investors' a need for more comparable information on face of P&L, to have relevant information that they can compare between companies, addressing current diversity there is in practice. So we will cover that in a moment, discussing all the proposals there, and then the second set of proposals is addressing users' feedback on grouping, on how information is grouped or ungrouped in financial statements, which we call disaggregation. And this in here, Nick will talk about this a bit later on. We have some both general proposals with principles, and also some specific proposals relating to, for example, disclosure of unusual items and expenses by nature or by function that are all part of this package of grouping and ungrouping disaggregation. And then the final main part of the project is around bringing a subset of non-GAAP measures into the financial statements that the board has defined as management performance measures. And this is really addressing user feedback that they use these measures today. They use non-GAAP measures, they find them useful, but they really struggle with their consistency. So companies change them from period to period without explaining, and general discipline and explanation around how these measures are prepared, how they relate to IFRS measures. They find that this information can be lacking, and also just knowing where they can find them today. Sometimes it's not entirely obvious, and it can be scattered across the financial statements, and it's different in different jurisdictions. So this was really a strong call for investors, and again, as Nick talks us through this later, you know, he will tell you that there is such a strong support for this because of the perceived needs and by investors there. And then the final bit, as I said, plus half, is really consequential changes to standard on statement of cash flows resulting from proposals in other parts, and it is really to remove options, some of the options that are there in IAS 7. And you know, the board was aware that there is demand for a more comprehensive review of IAS 7, but it has decided that this is not something that it will look at to do as a part of this project, but of course there is agenda consultation coming up. So with this introduction, unless there is any comments or questions at this point, I would suggest we walk through proposals, starting with proposals relating to subtotals, and then have a discussion about those. So silence, I think, means agreement. So I'll just carry on and maybe ask Nick to move us to next slide that just illustrates again the need for these additional subtotals in the statement of profit or loss. And this just illustrates, it's quite interesting when we speak to users, they often tell us, oh, but isn't operating profit already defined? And we are not surprised that they say that, because you see here on the slide, so to help board in making the proposals, we looked at financial statements of 100 companies across the world, and we found 63 of those already present operating profit today. But then when we looked at how they calculate this operating profit, we found that they had at least 9 different definitions used, and it's not really clear from looking at the face of P&L whether these definitions are consistent or inconsistent between companies. So on the slide here, there's an example of some common items that are presented differently. For example, share of profit or loss from equity method investments we find in different places. And also, this is a common pet peeve from investors where they find interest on pensions, that, you know, there's a really mixed practice in that some included in operating, some do not, and sometimes it's not even clear where it's included. So this is really behind what the proposals are, and maybe if you go to next slide to see what are the proposals. And the proposals are to classify all income and expenses in P&L. So income and expenses above income taxes, above discontinued operations, so those wouldn't be affected. But what is above that, classify in one of these 4 categories that we can see in the boxes on the right-hand side, and require companies to present subtotals that you can see highlighted subtotals here on the slide. And I think with that, it's just important to note that this is illustration. We find it's easier to explain proposal using illustration, but all the line items that see here are not necessarily mandatory line items, and it doesn't mean that there wouldn't be additional line items. So please don't take line items as something that is coming out specifically from this project. This is just illustration. So with all these caveats now, let me tell you what is in these categories. So starting with operating, really the operating objective that the board had in mind when developing this is to ensure that it captures income and expense from what the board described as main business activities. But definition works a little bit differently. Definition is a default definition in a way that ED says all income and expenses that do not meet definition of one of these other 3 categories that you see below are by default operating. And there are several reasons for this approach. One is that the board felt this would help achieve better consistency in classification of what goes into this operating being most important subtotal for most investors. And secondly, it was also felt that by default, entities' activities are operating. So if any category is going to be default category, then that is really best to be done with operating category. So that is operating category. So now if we look at financing, which is right down below, the green category preceded by subtotal of profit before financing and income taxes. So it's perhaps self-explanatory. The objective of this subtotal is to help investors compare performance regardless of funding mix between different companies. And as you might expect, the main item you find here are interest costs, and these would be included in the line item that we describe here as expenses from financing activities. There's a couple of more line items or items included in this category that may be more controversial. One is you can't see here. So this category is really about liabilities, but there is one particular income and expense from assets here, which is income from cash and cash equivalents. So in this example, we assumed it's immaterial, but if it is material, it will be presented in this category. And the reason for that is the board thought this is a good proxy of excess cash that investors would usually offset against finance costs, but clearly there is a part of cash that belongs to operating, but the board just thought that the cost benefit equation was not in the favor of requiring this split, and that maybe it's sufficient to just classify all of this in the financing And the other item, and you can see here, unwinding of discount, so the interest expenses on other liabilities, so things like pensions, provisions would also be classified in the financing category. And this is really not unanimous view in, different stakeholders have different views whether these items are financing. And applying the definitions in the exposure draft, they do not meet definition of liabilities from financing activities. But the board listened to feedback from investors who, on one hand, have asked that this item should be presented in the same place by all companies because there is so much diversity as we have seen on previous slide. And number two, most investors that we spoke to said they would treat it as financing. So not all, but most said they would treat it as financing, and those that said they wouldn't, they said it's easy enough for them, they know where it is and they can adjust their models for it. So that's financing category. And then if you go up to investing, so investing is about assets and it's particular type of assets. So it's capturing income and expenses from assets that generate returns individually and independently from other entity resources. And if this definition is familiar to you, it is because it's arising, it's very much derived from what is in IAS 40 today in definition of investment properties. And the idea here is to capture returns that investors would analyze separately rather than bundle with operating. So what you expect to find here in general corporate is things like income and expenses from financial instruments or returns on investment properties, for example. All of this, if this is not your main business activity, and we will cover that a little bit later if these become your main business activity. And then we are left with now integral, associate, and joint venture category. And what that is, I think maybe easier, Nick, if we go to next slide to just explain a little bit of debate we had about this. And I'm really keen to hear your input and your thoughts about this. So the integral, associate, and joint ventures all arose from the discussion where to classify results from equity method accounting, where to classify share of profit or loss from equity accounted associates, equity accounted joint ventures. And we had kind of this very specific instructions from both preparers and users. On one hand, investors have told us that whatever we do, they don't want these items in operating because they are not controlled by company and they do not lend themselves to margin analysis because share of profit is net number after tax, after finance cost. There's no equivalent revenue, so it would just mess up what users do with operating. So they want us to analyze it separately from operating. On the other hand, companies have told us that they have some of these investments that are closely related to their main business activities, and they like to see it, if not in operating, then as close to operating as possible. So the board has sought to balance these sets of views in that, in one hand, none of these is in operating, meeting investor demand, but then the proposal is to require entities to identify any integral, associate, and joint ventures, so those that are closely related to main business activities, and that therefore do not meet this definition of income and expense from investments that I talked about earlier. And then those income and expenses from those integral, associate and joint ventures will be presented straight after operating, and there will be this third subtotal, which is a bit of a mouthful: operating profit and share of profit or loss and income and expenses from integral, associate, and joint ventures. And then non-integral, they meet definition of income and expense from investments. They are not closely related, they are independent, and they would be classified with other income and expense from investments in the investing category. And I have to say this is somewhat controversial proposal in that users are not really excited about information about this split, if I may say so. They're not seeing the value and they are concerned with how this will be applied in the practice. So we have in the exposure draft, in addition to definition, there is some indicator and guidance proposed, but we are told that this may not be enough to achieve consistent application. and even with consistent application, there are questions whether this subtotal would be useful. So we are really keen to explore this further. Before I pause for discussion on subtotals, I just want to touch quickly on how the board has addressed the question of banks and insurers. So when we look at this previous presentation, I said this is a general model. And if we were to apply this general model to all companies, say a bank, then this would mean a bank would have to include interest costs below operating in the financing category. And it was clear this wouldn't be useful outcome for a bank, because something like net interest income is a key performance indicator for a bank. And this really should be captured in the operating category, and this would be consistent with the board's objective to capture income and expenses from main business activities in the operating. Similarly, for insurer or investment company, they don't need investing category. All these things are operating for them. So what the proposal is really a couple of principles which are based on main business activities that would then drive whether companies move items from financing and or investing into the operating category. And these main principles are you move items from financing if your main business activity is to provide finance to customers, and you move items from investing if your main business activity or you is to invest, or you invest in income and expense from you invest in assets that meet that give rise to income and expense from investments as in the course of your main business activity. So even if this is not your main purpose, you do this in the course, which is something we thought felt appropriate for insurers. So to just show you what this looks like, we have on next slide illustration of case a bank, investment and retail bank, which I understand is quite common practice, where you can see in the green they would move interest. The interest is in the operating, and in gray also income and expense from investments. They are also presented in the operating, which means really they don't have much outside operating. So the expectation is that there will be quite similar presentation to what these companies have today. Perhaps not everyone presents operating profit, but most of P&L would be in the operating. And just to note that these proposals would then also apply to conglomerates. So if you have multiple business activities, one of which is investing or financing, you would also apply this and move portions that relate to these activities into the operating profit. So I think with that, that's probably enough for introduction of subtotals. I will just pause here now for your feedback, questions, comments, your views on usefulness and any practical challenges with regards to these proposals.
Hello, it's José Luis. Are you hearing me well?
Yes, we can hear you. Hi.
Okay. Hi. Well, first of all, I thank you all for the opportunity of being in touch and this outreach. And for GLENIF is a GLAS. It's a tremendous opportunity to provide you some initial impressions that we got from this document. And if I may, I would like to start with some initial comments. Jorge, yo voy a hacer algunos comentarios iniciales baseado en el documento que Hernán nos envió acerca de las primeras impresiones que tenemos. ¿Puede ser?
Sí, perfecto, José Luis, adelante.
Okay. So the idea here is, first of all, is to welcome this project. I think in general, it provides a progress in the way financial performance is demonstrated, and I think it's the main point we understood is to shorten the gap between the preparers and the users, mainly the investors and analysts. We formed a task force here at GLAS to discuss this project, and our group has some initial comments. But of course, we are in the middle of this process, and this opportunity will help us to aggregate or to confirm some initial views. So the first point relates to the concept of the main activity on which the entity is engaged with. So we felt our initial impression is that we don't have a very wide or a good discussion in the document in relation to the definition of the main activity of the entity, and some guidance, we would say, to identify how the preparer will define or will state the basis for it. So this point is more critical, and certain economic groups on which we have several activities, including financial activities, for example. So it's an initial impression on that. The other point. So feel free if you wanna add some comment on that. So I'll move to another point.
Thank you. Maybe I'll let you just finish the explanation of the points, and then I will respond. I'm noting down, make sure I don't forget anything. I will comment on them then.
Good. So I will comment until the block of total and subtotals. So as soon as you provide more presentation, I will comment in the middle of it, okay? So the effects of classification for the results from investing activities, no? So I think you commented a little bit. In certain groups, we can have several activities. It would be complex to classify certain results for changes in fair valuing. For example, in a group which has several activities, and one of those activities is real estate, and on which it measures the properties at fair value to P&L, with results into P&L. So it reflects a comment from certain countries in the group. Is a concern. Of course, we are developing our discussion, and some more details can come in the future until we provide you with the comment letter. And one general comment in terms of the classification of financial performance within those blocks, operating, investing, and financing, and integral associates. One concern, one of the concerns we have is how to fit it in different countries, mainly in our region on which we have the legislation is very influences a lot the way we prepare financial statements here. So we have to comply with law and regulations, and they are not prepared for this change. It's our initial impression. So, for example, in certain countries, you have a definition in the law of what is operating. And if the financial cycle is part of your operation to finance your activities, so it's usual that it's embedded in your strategic plan, in your budgeting, and your day-to-day activities. So given this one of the reasons why legislation or the common practice in certain countries is to consider that financial activity is part of my business, it's part of my operation. So how to split it between below operating profit might be an issue. And we don't know how the regulator or even certain countries will change the legislation in order to comply with the new standard. So it might represent, let's say, a barrier to adopt or to comply with IFRS. It's an initial impression, because from country to countries you have a more developed capital market, in others not. So depends how we are, the users may have different needs in different countries. So it's one initial comment on that. So moving to another comment, I think it has to do with the stage of the presentation. The effects of the results coming from financial activities. The definition provides the standards, assumes that significant changes which are not clarified sufficiently in the project. We believe that we don't have sufficient clarification in the project. For example, when the entity does not is not part of the financial sector. I think you touched a little bit about that, but it provides financing to its clients for goods and services. No, how to classify that? No, and I think it's a common concern. I think you have an example, illustrative example too about that, but it's not very clear to make this choice. Sometimes depend on relevance. Of course, we are not guided by metrics to classify it. I don't think is the idea, but it will involve a kind of judgment to do it and explanation in the notes, so it will make a more complex exercise. When the other point is when the entity conduct business where first it charges in long run, more than 12 months, of course, it satisfies the performance obligation in the future, and the financial costs would be part of in the first year. The financial cost is part of operating or financial activities. Trying to make it clearer, I'm reading here in Spanish and translating to English. So if you are engaged in a business on which your product is delivered in long run, so you finance this activity search the day zero. So in day zero, I don't have anything in the P&L except the financial cost of this activity, for example. So how to classify this if this interest is part of the entire project to provide goods and services? So that's one point that came up in the discussions. The other is exchange differences coming from cash and equivalents. Is the only thing that would be presented in the financial results. And the latter question here in this topic, and in fact, talking about financial activities, as you might know, in our region, Argentina and Venezuela applies IAS-29. So we are talking about hyperinflationary countries, and so how we would consider the financial activities considering the financial net position of this company, how we would consider the results of hyperinflationary items affected by hyperinflation. So it provides incomes and expense as a result of these activities. So
it is the net monetary gain loss you're talking about.
Okay. Yes, sir. Okay. Yeah. So I don't know if someone else, Jorge, you want to add on that? You have a larger experience in 29, and I don't know if I reflected everything we discussed. Jorge, okay. Não sei se todo foi dicho sobre esto, ¿no?
Sí, ok, José Luis. Vamos a también habilitar a todos los participantes para que hagan sus preguntas, además de las que hiciste, que representan al directorio en general de GLENIF a través del trabajo que hizo el GTT a cargo de Hernán. Y bueno, en esto aquellos que hagan en español pueden contar con la ayuda de Felipe, con la colaboración de Felipe y José Luis para pasarla al inglés. Así que, si les parece, pueden pedir la palabra levantando la mano al lado de su nombre, arriba donde están los participantes, y Darío les va a ir asignando el lugar. Darío, si nos quieres comentar la parte de la foto, por favor.
Ok, si quieren habilitar unos 10 segundos, aunque sea cámara, para poder hacer alguna foto que quieran.
Ok, si pueden habilitar todos la cámara, nos ayudan a un instante mostrar la presencia de ustedes. Todavía hay varios sin habilitar, por favor, si pueden habilitar la cámara.
Me gustaría saber cómo, Jorge. No quiero salir.
Estás habilitado, Felipe. To invite the participants to show their faces in the picture.
Bueno, estuvo
and open for additional questions we might have on this topic. Thank you.
Bueno, por favor, si tienen también preguntas que quieran aprovechar ahora para hacerlo, por favor lo pueden levantar la mano. Recuerden que ahí donde dice participantes, al lado del nombre de ustedes hay una manito. Solo tienen que apretarla y con eso indican que quieren participar.
Yo tengo una sugerencia, Jorge.
Sí.
Marchese también.
El contestar las preguntas, los planteamientos que hizo José Luis, y después de eso yo tengo otras preguntas, porque si no va a ser largo el tema de preguntas.
Felipe.
Tadeu, my recommendation to answer the various proposals from José Luis, and after that, you can give us the opportunity to present additional questions.
That's okay. Either and Nick, what actually is just to for themselves to organize for the other additional questions, that if you want to carry on answering the questions that were posed.
Sounds good. Yeah. So I will kick off maybe, and I hope I've noted everything. I'll try do it in the order, and then maybe invite more discussion. I think I've heard you a couple of times mention the need for perhaps additional guidance on main business activities, and I heard you say this really applies to conglomerates. So I don't think anybody here is thinking bank doesn't know that provision of finance in their main business activity. So it's not in those circumstances, but I understand in circumstances where entities have multiple businesses and how to assess that. You are aware that in the exposure draft, we have limited guidance. One part of guidance suggests that if you have a segment, if you have a separate segment, then this is an indicator that the activity of that segment is a main business activity. So in your example of, manufacturer providing finance to its customers, we sometimes see in those companies that this finance arm is presented as a separate segment. So that could be an indicator. Of course, the split by segments can be done differently. So it's not a criteria, it's just an indicator. I think another thing that in the ED is explaining the whole basis of this, and the premise being that if things like net interest income is a key indicator of your performance, then it's an indicator that it is your main business activities. Or if your investment returns are a key indicator of your performance, then it is an indicator that it is investing is your main business activity. So I would be interested from you if you could, and not perhaps immediately, but when you finalize the comment letter, maybe give specific examples of situations where these judgments are difficult, and if you have particular view, what could help in those situations, what guidance could help companies determine that. I think that would be really helpful. As I said, it's really about these conglomerate type of situations that we are talking about here, and then coming with some examples would be really a good, so the board can really focus on the situations where this assessment might be problematic. I just want to share with you feedback we have received. So the exposure draft currently does not propose any disclosures around how entities has determined its main business activities and not determined the main business activities, and we have heard feedback from some that it might be useful to have some disclosure around this, explaining what process they've gone through to determine that something is or is not a main business activity, to just give more transparency around that as well. So I thought that was interesting, and I don't know if you thought that would be helpful as well. If you do, then please feel free to refer it in the comment letter. So I don't know if you have further thoughts around main business activities before I move to some of the other comments.
Okay. By the moment, it's okay. We got your comments. I think it's part of, as part of this discussion, I think we'll come up with how we envisage that something could be exemplified for the cases that we face here. So thank you for that, and we will consider that in our comments.
Okay, and then the next comment I heard, and please correct me if I misunderstood this, is I heard concern with remeasurement at fair value being presented as part of operating for investments companies. Is that right? Did I understand this concern correctly?
It's one case, yes.
So they don't want it in operating. And I mean, we have heard this feedback, and I think investment, property companies, REITs, I know that they have a performance indicator that is before remeasurements, before fair value changes. And what is useful to highlight is that presentation of a subtotal, say operating profit before changes in fair value, would be possible in this model. Condition for that would be for the company to present analysis of expenses using by nature method, and Nick will talk about that in a moment. But if companies present it in that way so that they have fair value as a separate line item, fair value changes, then they could certainly introduce this additional subtotal that is not precluded by the proposal. So I hope that would, you know, enable them to communicate also what additional relevant information they have. And certainly and there's also proposals for management performance measures for any adjustments that they want to make further. So, and I think the question you had on the link, if I understood correctly, relating to assets and liabilities from contracts with customers from application of IFRS 15. And here it's very much the principle. So when I was explaining the subtotals, I said in the financing category, it's really all about liabilities. The only exception is cash and cash equivalents. So if you have a significant financing component arising from a liability that's from IFRS 15 or anywhere else really, then this finance cost is financing. If it is asset on the other side, we talked about definition of income and expense from investments. And if it doesn't meet that the definition, then by default is operating. And it's not, I mean, there is some judgment involved here. I think when you're talking about contracts with your regular customers, even though there might be finance income that's not maybe your main business activities, it might be considered related income and expense. So it's possible that the companies would conclude that definition of income and expense from investing is not met in those circumstances, and those items would then by default be operating items. And then moving on, I think you had a question around Forex on cash and cash equivalents, which the proposal, we don't have a specific slide on that, but the proposal is that Forex basically follows the transaction. So if it is on cash and cash equivalents, it goes into the financing. You know, if it is on the items that are in the operating, it goes in the operating and so on. But I don't know if I maybe misunderstood the question. Maybe if, was that the question or was it something else there?
I thank you. Those comments has more to do with a clarification in the project. We felt that some additional clarification would be very welcome. That's more on that. So
okay. So it's clarification on classification of foreign exchange differences, for example.
Yeah, it might. Perhaps in the illustrative examples, it can be better explained or something like that. So we are working on that. So in the same way, we are going to provide some additional examples for the other topic. We would like to consider that in our comments to how we consider that it could be better explained in the project, perhaps. But I understood your explanation. I'm in line with that. So sorry, perhaps we didn't notice that so clearly in the EDE, but we are gonna look again and comment where applicable. Okay.
Well, that's why we're here, to try to clarify as much as we can, and hopefully that's helpful. And it's really helpful feedback because, you know, Nick and I have spent so much time with this document. It's very hard for us, I think, now to see if something is clear or unclear because everything is so much in our head. And so this is very helpful feedback, I think, when you go through the paragraphs and say you think this is clear, but actually it's not that clear. Might
I just jump in and just because I took away from that point, sorry, when you were explaining it, Jose Luis, that this was specifically to do with the foreign exchange with relation to hyperinflationary economies and that the net monetary impact. And this is a problem that has come up in other discussions that we are aware of, that we will need to look at how we're going to deal with that particular aspect. So I just wanted to mention that we are thinking about that, and you haven't missed something. It is one that we need to address.
Great.
Yes,
Yes.
thanks, Nick. Yeah, because that, yeah, I was just going to come on to that. I think that paragraph in IAS 29, and it's not something we really specifically looked at, I have to admit, in developing the exposure draft. And I think you guys are the best place to help us resolve this into what you think would be reasonable solution as to where what is best classification option for these items, or for the net number that IAS 29 requires to be presented. So I think your input to how what's the best way forward on this would be really helpful. And then
Excellent.
I think you had a few comments about links to legislation and in different countries, and that some already define what is operating profits, and this could be different from what is proposed in the exposure draft. And I think we have some other jurisdictions that have similar issue, and it's clearly, in order to arrive at consistent definition of operating for all IFRS countries, somebody has to change. So I think it goes without saying, and it's just a question of how we can work together and what do we need to do to kind of liaise with all the stakeholders so that this change happens, because the last thing that would be helpful, or it would be unhelpful to users if they ended up with somehow companies doing 2 operating profits. I mean, that would be extremely confusing and calculated differently. So yeah, we've been in discussion with other countries as well that have this scenario, and understand. I think what's helpful is to maybe understand the differences between those definitions and what's proposed in the exposure draft, and then engage with stakeholders to help them understand why the IASB proposals are different and what is expected benefits to users from that. And I think maybe worth, I don't know what examples are in these countries, but sometimes there are the definition of operating would exclude things that are considered non-recurring. So, and sometimes this would exclude certain impairments or restructurings and so on that would not be excluded from operating profit as defined by the IASB. And what the approach was in the exposure draft is really to get complete picture and complete a view of stewardship of entity to investors by looking at the P&L, so that this operating profit reflects everything that's gone on in the period, regardless of whether it's controlled by management or not, regardless of whether it's expected to repeat in the future or not. So it's a complete picture of its operations. But then there are other proposals, so it's important to look at this as a package. There are proposals for unusual items, which would require a company to separate out items that are not expected to recur. And then we have proposals for management performance measures, where companies, for example, if they find that current definition of operating is useful for them, they could have a management performance measure. They wouldn't be able to call it operating profit, but they could call it adjusted operating profit, where they can retain current classification of what is operating for them. So there are things, it's important to see this as a package. And I think with that, I think I have touched on all the points you raised, and I just wonder if there's any further reactions, or if there's any other comments on subtotals before we move on to proposals relating to disaggregation.
Philippe, you want to comment on that?
Yes, I have a question for you.
Excuse me, Felipe.
In many countries, as is the case in Mexico, regulators in the financial and insurance sectors have some requirements that may be different to the proposals of this exposure draft. My question or recommendation is, have you discussed this document with IOSCO, the International Organization of Securities Commissions? Because if they support the changes, it will be easier for many countries to take care of that.
Thank you, and that's I mean, a great question, and clearly regulators are a very important stakeholder here. So we have had discussions with IOSCO over the course of the project, and actually when we come on to proposals for management performance measure. We can explain how the board has adjusted those proposals even before the exposure draft went out in order to reflect some of the IOSCO members' feedback. So we worked really closely with regulators there. And, you know, I have to say the main interest has been on management performance measures and interplay with their guidance on non-GAAP where they have guidance. In terms of some of the sector specific, we have also had discussions with, you know, Basel Committee, for example, and some of the European banking and insurance regulators that have similar requirements for banks and insurers just to check that no information is being lost. I think what we found in Europe, and let me know what it is like in Mexico, is that there are a couple of jurisdictions where these templates are used by companies as for presentation of their financial statements, but in other cases it's actually separate exercise. So companies will still present their financial statements how they present, and they will provide this information separately anyway. So the fact that the structure of the statement might change wasn't that important, but we just wanted to focus that no items could be lost perhaps. And I think with insurers and banks, it was also helped by expectation that there won't be much change for them as a result of these proposals. So there wasn't, we haven't identified any negative effect vis-a-vis these requirements. But as again, certainly feedback from Mexico would be helpful, and especially knowing whether banks and insurers there use these required information in how they present their financial statements today, or is this something that's provided separately?
Okay, thank you.
We can discuss with our local regulators that IOSCO is willing to support the new requirements. Is that correct?
Well, it's. I mean, we haven't had a comment letter from IOSCO, but we have participated in several meetings. And I mean, I hate to say it, but of course, you know, we don't know what will be in the final comment letter, but discussions we have had were positive. I think there were concerns around management performance measures with respect to making sure that, you know, interaction with regulatory requirements on non-GAAP is clear and there is no unintended consequences. So I'm sure we will have further feedback on this and you know, further work to just make sure this happens. But I am positive because, as I said, even before the ED went out, we had detailed discussions with several IOSCO members, and we have reflected suggestions arising from those discussions already in the exposure draft.
Okay, thank you, Felipe. We have a question from Domingo Marchese, Hernán Casinelli, and Juan Gras. Welcome. Domingo, please.
Me parece importante destacar que es necesario para tres conceptos que serían cambios en el valor razonable, diferencias de cambio y efecto de la inflación, que exista una guía en donde claramente se relacione estos conceptos con los rubros patrimoniales que le dan origen, con los activos y pasivos relacionados, en donde se explicite que todos los conceptos que no estén asociados con activos o pasivos vinculados con la financiación deben tratarse como financieros, los asociados con la inversión como de inversión y el resto como operativo. Nosotros tenemos metodologías desarrolladas para hacer esos cálculos en el contexto de alta inflación. En ese sentido, que el hecho de que normalmente se considere eso como un efecto neto es un problema, digamos, conceptual, pero que tiene una solución específica.
Please, can you translate the question?
I can do that, George.
Okay.
I basically what Domingo is saying is that we have just one gain or loss on net monetary position today in P&L. But actually, if you look at where these gains and losses come from, the exposure of assets and liabilities, what he's saying that there are methodologies, and they have methodologies in countries with high inflation, that you can make a kind of allocation of these gains or losses on net financial position based on the underlying assets. And then, for example, some gains and losses would be better allocated between the operating, others in investing, others in financing. I mean, that maybe it could be the time that instead of just having one line, whether this could be split between these categories. Domingo, please, if I haven't explained well, please correct me.
Yes, perfectly. We had developed techniques to allocate this income or expense to the belonging asset and liabilities. So we can collaborate with you if you consider practical, because we have a long experience doing this allocation.
Thank you so much for that feedback, and it's quite interesting. So this would make the proposal consistent with what the board is proposing to, with foreign exchange differences, and where the proposal is that they are classified in categories as they relate to. But it's interesting because the feedback we had on this proposal on Forex was that sometimes it can be costly for companies to disaggregate, in that they need to set up systems to do that. And Nick, please feel free to interject here. I think you've had more discussions on this in your participation in field work. So it would be very interesting to have your kind of detailed commentary on this, because we want to avoid a scenario where we propose this split potentially, and then to have feedback, well, this is putting too much cost on the company, and this is not something that is feasible or justifies the benefits for investors. So
we are sure that it is not a costly job to do. It's very simple. Is especially with financial information, in computing or digital information.
No, thank you for that, and please, provide us as much detail as you can in your comment letter. That will be really useful, and because Tadeo, I don't think we will get many comments on this otherwise, so we will need to go with this to really take it forward with the board, right?
Yeah,
just because right. We are only a few countries with the problem. But I think something is interesting is to define which are the assets and liabilities associated with finance and associated with investing, because it is necessary just not only to allocate the income and expense related to hyperinflation, but to changes in fair value and exchanges differences. The idea is that you have to define which is a financial asset or financial liability will be related to financial activities.
Indeed, and where this exposure draft doesn't go is we don't extend the proposals for categories to the balance sheet, but there is implication of some classifications, because even when you apply Forex, you kind of need to make those assessments. But yes, no, that's what you're saying is really helpful. So I look forward to reading about it in a comment letter.
It is necessary to relate, if income and expense are related to asset and liability, it's necessary to classify assets and liability in the category, in the corresponding category. I know you haven't done this for the balance sheet, but it's necessary at least define which are finance, investing asset and liability, and the rest will be operating by default.
Indeed, and we already have a bit of that, don't we? Because we are the financing and investing categories are really both very much driven by assets and liabilities. So there is a bit of that. It'll be interesting to see if there's any gaps there that might need to be thought about further to make this classification work on inflation as well, in inflation or hyperinflationary environment. So with this, Nick, is a good time to maybe move on and talk about proposals for disaggregation?
Yeah, that's certainly fine for me. So let me just roll this ahead.
Actually, just one clarification here, that I know that there might be many questions, but the point is here is that just for the sake of the time, if you can just move on for the second as we are proposing here, but it doesn't mean that you can't, in the end, just send us the questions. We would be very pleased to receive, and it will be very helpful for understanding. But the most important is to try to cover all the 4 topics. Otherwise, we just stay here for the entire day just talking. Okay, go ahead, Nick. Thank you.
Yeah, thanks for that, Tadao, because I think it's true. We could probably talk about each one of these for the full time. So it's important to get some coverage.
We would appreciate having the whole day with you guys.
We would love that too. So to move on to disaggregation. So as Aida mentioned at the start, this is some guidance around being proposed around how things are put together or disaggregated, as the name suggests. And the feedback that we had heard from investors was from both aspects. So in some cases, the information is aggregated to a point where it's too aggregated. It's difficult to see the detail and to understand what has happened. But sometimes also the information that's presented is not necessarily the right information for the analysis that needs to be done, or is disaggregated to such a level that things are obscured and it's hard to see what's material and what's not. So to address both of those, I would really like to describe it as guidance to try and get better disaggregation. And so it's not a push for more or less, it's trying to get the right balance between the two. And so for that reason, we have, as this slide suggests, a range of proposals that are being put forth. And as Aida mentioned, there's some of this is more sort of general and principles based to help the way we think about disaggregation, and then some of it is quite specific. And so I'll talk a little bit first about some of the general, and then I'll talk about 2 of the important specific ones, being the analysis of expenses and the unusual income and expenses. So in terms of the first bit of the general guidance, so what the board is proposing is some guidance around the roles of the primary financial statements versus the notes. And this is to help give some direction on what level of disaggregation would be appropriate on the face of the primary financial statements versus the detail that would be looked for within the notes, and looking how that interplays with materiality. Along with that, some proposed required line items have been proposed. And that's sort of in line with this guidance. For example, goodwill has been proposed on the balance sheet as a specific line item, and that's because it's got different characteristics than the intangibles that it's typically grouped with. And then in line with what we've talked about previously about integral and non-integral, the proposals look to separate those as well. The other piece of what we call general is principles around sort of the steps to go through to think about how to go through this disaggregation process, and that includes some guidance around what to do with other items. not necessarily, or not saying that it's not allowed to put other items, but trying to give some helpful guidance about how to minimize that and to be more descriptive about what those groupings have within them, and where that can't be done within a label, for example, some guidance around some note disclosure that would be helpful to give more transparency. And this is really aiming at particularly those cases where a number of items are grouped together, and it becomes a really large balance, and it's sometimes unclear for an investor that doesn't have the insight into what's gone into the thinking about how materiality has been applied. They don't really see, all they see is a big number, which could potentially be material, with no transparency about what's underneath. And so that's the problem that's trying to address. So let's move on to talk then about the first of our specific proposals, that being analysis of the operating expenses. So as we've alluded to a little bit in the discussion already, the proposal here addresses both the two methods of presentation. So the by nature, where we have the individual line items such as employee benefits, depreciation, etc. So the inputs versus the by function method of presenting the expenses, which would allocate those expenses to your cost of sales, general and admin, research and development type functions. And so what the board is proposing is that firstly, to no longer have this be a free choice, but to clarify that that the entity would need to present one or the other of these two. And that's really to avoid incompleteness in the expenses. So if we think about the example where an entity presents a cost of goods sold, so doing a by function approach, if they go on to then present a depreciation line item in that same statement, it becomes unclear if the depreciation that has been allocated to the cost of sales has been stripped out so that it's incomplete and everything is within depreciation, or whether depreciation is incomplete because some of it has been allocated to cost of sales. And so this is the completeness element that's trying to be eliminated by this part of the proposal. As I mentioned, it's not a choice. The method that's most useful to the users of the entity's financial statements would be the required method, and that's some guidance has been given to help determine what that would be. And then importantly, there's a note disclosure being proposed for if the by function method is chosen, that the expenses by nature on the group basis, so for that operating expenses only, would be presented in the notes. And I say on the group basis because the idea isn't to pull out the individual cost of sales, for example. It's to show employee expense for the year for the whole entity. And so the reason for that is that investors had a strong message that by nature for them always gives them better information in terms of forecasting future cash flows. It also, in many instances, has a closer relation to the cash flow statement, which they find important. And so that level of detail was always considered to be important from their perspective. I'll move on now to the unusual income and expenses. And so unusual is, as Aida mentioned, because operating expenses is trying to capture, or the P&L is trying to capture the complete income and expenses of the entity, not considering these characteristics of recurrence. The board observed that in practice today, many companies try to present something that is equivalent to an unusual. So sometimes that's called not recurring, sometimes that's called extraordinary, various terms, but all trying to capture this idea of limited predictive value. And so the board identified that this was really the sort of the characteristic that preparers were trying to present and that investors found useful. And so this is where the definition has been applied or is being proposed to get consistency about how entities look at that and pull out those particular items, and to focus them on this aspect of limited predictive value, because we know not everybody looks at this the same way. And so the definition is quite specific. It's those income and expenses that would not be expected to recur in future several reporting periods. The other important aspect of this proposal is that it's proposed as a note disclosure. So it would be proposed to be a single note that would give the opportunity to explain the circumstances behind why something is unusual and to show how it has allocated to those items that are in the statement of profit or loss. And in those cases where an entity presents its a note by nature, it will be able to allocate to those as well. And so I think that was all I wanted to say on the sort of all the general, the analysis of expenses and the unusual expenses. It is quite of a diverse range, but as I said, trying to address a number, both the too much and the too little disaggregation. So I'd like to turn it back to hear your thoughts and any questions you have on disaggregation.
If I may, some initial comments, Nick, on these. The introduction of unusual items, of course, it will be a challenge for the preparers. I think, and it will introduce a level of judgment. I hope not subjectivity, and to define how it will be reasonable to expect that this item will not occur in the future, and in the reporting periods in the future. So some level of concern on, if not, I cannot say, but perhaps we will face a lot of subjectivity, as I said. So it's something that we have to perhaps to foresee what would be expected to be unusual items, because it's usual that countries face litigations. It happens once. You don't know when it will happen again. It's usual that we have changes in law, basically, and when you see developing countries, legislation changes a lot, tax legislation, labor legislation, so it affects a lot our results and in those countries, and changes in strategy that can change products and provoke a lot of consequences and the volatility of the results. And so what would be important to split is volatility caused by many factors, external factors or internal factors of the entity that has not to do with unusual items. So, but it's an area that it's very, very dangerous to manage. So we have some concerns in this area, and I think it's the main point. The other point has to do with function, nature by function. So certain legislation, as it has to do with my previous comments on how to fit it into the different legislation, because certain statutory law foresee that you have to present your results by nature, and so perhaps we are going to have some, let's say, some difficulties in attending the users if they look for not by nature instead of by function. So, and the way we used to do is to explain that in the notes. And if we don't have this chance to do it, perhaps we cannot reconcile those two words. So it's another comment on that, Nick. Thank you.
Jose Luis, that Hernan Casinelli and Juan Gras have questions.
¿Puedo preguntar yo, Felipe? Hernán.
Yo creo que sí, por favor.
Well,
Sí, Hernán, adelante, por favor.
thank you very much to the staff of the IASB and to Tadeo for the outreach. I would like to return to the link between the IAS 29 and the project, because as you know, in our region we have 2 countries that are applying this standard, and this is a concern for us. And as you well know, a typical item of the performance in those entities is the gain or losses from the net monetary position. And the IAS 29 states that these gains or losses will be presented in one item in this P&L. And our first impressions looking at the project is that an entity on applying IAS 29 would separate the gain of losses proceeding from the net monetary position in different activities in the performance, and we do not perceive that it necessary improve the communication of the performance of these kind of entities, mainly in financial entities, where this way of communicate this gain of losses could suggest to to users that one of the main business activities in this kind of entities is to collect or to expense in inflation, and this is not the true of the activities of this kind of entities. And we think that it is important to take it into account in the definition of financial activities, because it could result in worse communication of performance in entities on applying IAS 29. This is the first point that I would like to take into account. And the other is that in the group, in the working group of the class, we know that in the paragraph 6, there is a mention about the usefulness of the project for both a consolidated financial statement and separate financial statements. But we know that when an entity prepares its financial statements, assume the vision of the parent entity and not the vision of the group, and this could result in a change of the main activities of the entity, and this could move some results for the group to other categories in the separate financial statement. And in our view, this could be clarified in the standard, because maybe all the requirements in the projects could not function in the same way that is designed for groups. Only this point I want to translate to you.
Okay, hello, this is Juan Gras. Can you hear me? I have just a question. In the case of cost of sales, when an entity presents its statements of income by function, I think that cost of sales should be also disaggregated by nature in the notes, because cost of sales is a very important figure, and disaggregating it by raw material, which is variable, and let's say labor and overhead that may be fixed, it's very important. So that's a point I have, and it's going to be in our letter in any case.
Okay, we have 3 questions in the chat. Can you help me, Tadeo, for the translate? I read in Spanish. The first question, la primera pregunta, ¿por qué el IASB propone requisitos para algunas empresas como los bancos para clasificarse en la categoría de financiamiento de inversión? Este enfoque logrará el objetivo de que las ganancias operativas incluyan ingresos y gastos. Can you translate, Tadeo?
Jorge, actually, these questions are related to the first topic.
The first topic, because the question was did in this moment, but we don't read that.
Yeah, I know that. What I was just trying to is as I said, I'm sure that there are other questions on the first topic. Is just trying to move on with the presentation. But yes, of course, we can deal with that as well. But it's I actually struggle to understand the financiamiento de inversión, because actually there isn't this option within the exposure draft. I don't know whether the person who asked whether he want to clarify this one.
Yeah.
So is this about accounting policy choice for moving finance costs into operating? No.
I don't think so.
No.
It's
Okay.
I think it's a bit mixed with the classification that we have in the statement of cash flow, when you have the acquisition of a PP&E, and then you have this within the category of investing. But at the same time, if you finance that one, you might have this in financing. I mean, just the payment, but you could have this gross, the money coming into the financing, and then the expenditure, the amount paid within the category of investing. But it would be related to cash flow statement, I think so. But I might have misunderstood the question, but I think that would be the case here. But again, as I said, I mean, if we can just try to focus on this second topic, we can go back and try to answer the others for the first topic. But if we can just move on for I'm monitoring here, Jorge, whether the questions are in relation to this topic, and if they come, I will translate this into English.
Well, preguntamos a Remy, que hizo la pregunta, si puede luego aclararla. Gracias.
Gracias a usted, Jorge.
So is it a good time for us maybe to comment on what we've heard so far? Nick, I don't know, did you want to kick off with comments on this, or?
Yeah,
I think you're still on mute, Nick.
Yeah.
Thank you. Sorry, that's the danger. There's roadworks going on, so I try to keep it on mute as much as I can. But yes, I will try and go through in the order, and Ida, if you have anything to add, please jump in. So I think the first comment was around the unusual and the level of judgment that might be required. And there was specific mention of, in some cases, there can be quite a lot of volatility involved, and it can be difficult to judge whether something will occur again or not. And so I think it's a couple of points on that is one, the inclusion of the by amount. So because it was mentioned that, there's sort of these things like litigation that happen all the time, maybe changes in laws that happen relatively frequently, etc. And the addition of the amount as well as by type is to try and capture those areas where the amount is unusually high for a particular reason, and to draw those out such that it's not, you wouldn't expect. So for example, litigation is a great example where, of course, companies sort of have these routine legal expenses that are ongoing, and that's not meant to disqualify the case when that event occurs, where there's a very large payout, which is not typical for the entity, that amount can be classified as unusual. And so it's this ongoing nature doesn't necessarily disqualify an amount from being unusual. Now, I certainly understand that there's judgments involved there, and I think it would be very helpful to understand what sort of guidance would be helpful to make some of those judgments. We've tried to put some examples within the standard and to give some application guidance around how we see that working, but certainly there will always be some management judgment involved. On the point about volatility, I wanted to just pull that out specifically because it's in thinking about that. I mean, what the proposals are asking entities to do is to make a reasonable judgment about what's expected in the future. So nobody's asking you to look in the crystal ball and be able to guess the future. It's about, you know, what are your reasonable expectations. It doesn't necessarily mean you are 100% going to be right, but what's reasonable. And that volatility is something that you would consider. So if an expense for a particular organization, again, maybe litigation, typically fluctuates by quite a large amount, then that bar for what would be unusual becomes higher, because you would typically expect that to go up and down by quite a large amount. So taking into that volatility into account is sort of expected in that forward look. And so I think that's what I wanted to say about the judgments. In terms of the IAS 29 point, I think that we have addressed that already. I mean, we know that's something that we're going to need to take away and have a look at this net position. If I could maybe just clear, I think what I took away was that the preference would be that net item would be a financial activity. And I think it would be helpful to get that feedback if that's what that was, to help us in how we address that particular point. In terms of the cost of sales, so when you have a function, you have the cost of sales could be disaggregated by nature in the notes. So I wanted to mention that this is something that the board discussed, and it was decided that disaggregation would be on an entity level, so that, and this was in response to feedback from preparers that it would be excessively costly to be able to provide the breakout of the individual functions. So while certainly that information would be considered useful in the cost benefit analysis, the board is proposing that rather than at that level, it would be at the entity level. So users would still have a good level of detail about nature, but the intention is to reduce some of the costliness of implementing that part of the proposals. And those were the points that I wanted to note. I don't know, Ida, if you had any others you wanted to discuss.
Thanks, Nick. Yeah, I just want to maybe add a couple of things, and then I think there were specific comments about law requiring expenses by nature that I want to explore further. So I think, you know, Nick explained some of the thoughts around unusual, and I just want to highlight that, you know, subjectivity is not necessarily equal bad requirement or bad disclosure, and requiring entities to exercise judgment is a part of financial statements preparation. And really, companies do this today all the time, and investors tell us they're quite tired of, for example, seeing restructuring being singled out as unusual items for 20 years in a row. And I'm not exaggerating, we have this example. So they really want more discipline around this and more accountability by companies into what they put as unusual. So it's something investors find useful. It's something companies do today. So it feels like it's opportunity that would be wasted if we said, oh, just because the judgments are required, the board shouldn't go ahead with this, because it's happening in practice today. But as Nick said, you know, any more that would be helpful. The judgment on this can never be removed, because with anything forward-looking, unless we provide a crystal ball, which we don't have, unfortunately, but you know, there could be maybe more in terms of guidance or examples that could be helpful. And just to mention on the cost of sales, I think Nick explained why the board rejected this approach, and what the board rejected was a complete approach, complete analysis of functional items by nature. But we had feedback that you've just given us, Juan, similar to feedback from some investors, that, you know, they agree cost of sales is important and they want to understand what's gone in cost of sales. So I wouldn't be surprised if we went back to discuss maybe looking at some selective disclosures for something like cost of sales. So not require full analysis of cost of sales, but indicate some key items potentially, you know, how much staff costs, how much depreciation is included in cost of sales, as a way to manage these costs that Nick has talked about, but then still provide some benefits to investors. So I would be interested in your discussions with companies if you think something like this could be feasible, and then if you think this is approach that could work, you know, please do go ahead and recommend it. But you know, with this analysis by nature, even at this consolidated total level on operating profits level analysis, we had feedback that providing this information by nature could be costly for those that don't already present or disclose analysis by nature. And then I heard you make a comment that law requires expenses by nature. And I just want to understand this better, because I've heard this in some other jurisdictions. And what I've heard in those other jurisdictions is that companies don't feel they are obliged to present by nature. They still present either by function or by nature, whatever is most useful, but those jurisdictions also provide complete analysis by nature. So for those jurisdictions, it's actually these requirements don't pose any additional costs, because they either do by nature now, or if they don't do by nature on face, they do it in the notes completely. So I just want to understand better in your legislation in different countries in South America, is this a case of requirement of by nature being on the face, or is it a case of requirement where information by nature has to be somewhere?
I think it has to do with my comment, Ada. In fact, I refer, for example, for the legislation requiring you present your P&L by function, and that's it. So it is straight, and presenting that by function, and then in the notes we use to present by nature in order to provide additional, more qualitative information to the analysts and so on. So that's where we stuck. How we will continue to present in accordance with the legislation. Sometimes it will not. It will conflict with the future standard. I don't know. Yes. So how to solve it? So it's a discussion with regulators and. Because the statutory law it's sometimes is very, very strong in different countries. So, and we have to follow the statutory law. And
in which countries is this, Jose?
Well, I can say Brazil.
Okay.
Probably, and when you have this event over there, probably you are gonna be presented in more details to this discussion. And but I maybe in other countries in our region we have the same, we might face the same situation. It's something that I don't have a clear picture yet, but it's something that we have some concern. Yeah.
Jose, it could be very helpful if the working group of GLENIF that is taking care of the comment letter, if they are able to raise the countries that might have some conflicts with the law in relation to presenting by function by nature, that would be very helpful.
Right.
Then Tadeo is going to solve this problem. with regulators for
Yes,
Tadeo.
I'm going to change the laws.
Yes.
Okay.
Please do it.
Juan Gras, have a question, please? Because you has the hand. Juan Gras. Okay.
No tengo ninguna pregunta, no sé por qué está la mano ahí que no la puedo borrar.
Okay. Well. Tadeo, hay una pregunta en el chat en inglés para la primera parte. We have a question in the chat for the first part.
It's actually, it was first prepared in Spanish, and then the Angelica translated this into English. Yes. I think that can you, Nick and Ida, see the chat? And it is much more related to the process of gathering the feedback from the investors. We have a very strong definition of primary users, and when we discuss about the useful of the information, the financial statements, we take into consideration mainly the primary users, and then therefore the investor's opinion, it's one that we weight a lot when we are considering improvements in the financial reporting. But I don't know whether for banks we had this specific feedback, whether they would agree, and that's a good suggestion or not. Do you have, Ida or Nick, anything?
Yeah, thanks. I've just realized I can scroll the chat, and I was able to navigate through the question and read it. Thank you, Tadeo. As Tadeo explained, so when the board decided to work on this project, the first thing we did is we had extensive meetings with investors to understand what the problems are in financial reporting. These included both equity analysts as well as credit analysts and investors. So it is all of them which has driven the agenda. I think when you talk about some of the credit analysts or banks, if you think of banks in their role of credit provider, there is a case to be made that maybe benefits to them will be fewer, because in those cases they have access to private information as well. They can ask company whatever they want, even if it is not in financial statements. But we hear even for those type of users of financial statements, they are still users of financial statements. They find audited financial statements useful and helpful in their analysis, so they would also have the benefits from the proposals. But really it is quite interesting that I think every meeting with investor we have had, there has been a lot of support for all of these proposals in the exposure draft. I mean, not to say there aren't suggestions, some like, for example, MPM proposals to go further. I mentioned earlier, some say some of the subtotals relating to integral are not particularly useful, but like key ideas of defining, operating, of having more discipline and transparency, have really been so well received by investors. And so I think that goes to say that it is responding to the feedback, and the investors we are speaking to, they've included some credit analysts, although they are mostly equity investors we have been having outreach with so far.
Okay. In the chat, we have not questions.
I think that's my cue then to move on to the management performance measures section, which I will jump ahead to here. And so just to preface the management performance measures, so this is addressing non-GAAP measures, and I want to talk a little bit about sort of why the board is proposing measures around non-GAAP information, what's the subset, because it will be a subset of non-GAAP that are covered by these proposals, and then what the requirements specifically are asking for before we ask for some of your feedback. And so, as I mentioned, the issue that the board is trying to address is we all know there's a lot of non-GAAP information out there, but the feedback that the board received was both from investors and from preparers that they find this information useful. The challenge has been that it's not always presented in a consistent way, so we don't always have the same types of reconciliations, the same information isn't necessarily provided about those types of measures. And so the board is aiming with these proposals to address those, to get more transparency about the non-GAAP information, and to get more discipline in how they're used. For example, explaining when changes happen from year to year. So to talk about, and I'll just start to mention that Aida had mentioned at the start that this is one of the proposals that investors have been particularly supportive of. I think preparers also to a relatively high degree have been supportive, although with maybe some reservations around parts of the definition, which we'll talk about now. And so, as I said, the measures that are being addressed by the management performance measures are a subset, and they're tied in really with the focus of the project on the statement of profit and loss. And so to do that, the definition is those measures that are subtotals of income and expenses. They're the ones that are currently outside of the financial statements in public communication, so the ones that are used to publicly communicate with the investors. They're ones that complement the totals within IFRS. And then importantly, they're from a management's perspective. So they're those measures that in management's view complement an aspect or to display an aspect of the financial performance that complements the IFRS standards. So then importantly at the bottom, we can see there, this is proposed to be disclosure in a single note. So not, again, similar to the unusual, to try and get that enhanced transparency, to have a single place where everyone knows where to go to look to find the information about management performance measures. So to just highlight further about how this truly is a subset of the non-GAAP information. So this table is trying to show that we're really focused in those areas in the green box. So those things that are adjusted profits, adjusted operating profit, adjusted EBITDA. So those profit and performance type measures. And as I said, that really ties to the objectives of the project and the focus on the statement of financial performance. And so we can see what's not included being those measures of non-financial performance, so things like numbers of subscribers, customer satisfaction, surface area, these types of measures are all not included. Importantly, it excludes what we call IFRS specified measures, and that's so that the disclosure requirements aren't required for those specific measures which are on the face of the income statement already, or some which are quite often used, which are presented but not required. So for example, gross profit is one of those types of measures that would be included there. And then also importantly, not included are this areas that are ratios, balance sheet measures, or things that are driven from the cash flow statement. So some examples there, such as free cash flow or return on equity. And I think these are ones where when we hear from investors that are really interested in these proposals are where we hear feedback that they'd really like us to include some more of those types of measures within the proposals. So I just move on to what the requirements specifically are. And so on the slide is sort of a list of what we think are the intended benefits, but what's being asked is a suite of disclosures around the management performance measures. So for those that meet the definition, as I mentioned, it would be required to be in a single location. The entity would be required to explain what the measure is, how it's been calculated, and to explain why it presents the information that they think is important for the users to understand. It would be required to be reconciled to the closest IFRS number or IFRS specified subtotal, so that there's a clear link to the IFRS numbers. And then between in that reconciliation between the non-GAAP measure and the IFRS measure, will be required to disclose the tax and the non-controlling interest impact of each of those adjustments. And that's to allow for a user to look at one of those reconciling items, be able to remove it, and to recalculate a per share measure based on that measure. And so really this aims to get consistency in the amount of information or the type of information that's disclosed on this subset of non-GAAP measures across the jurisdictions. We know there can be quite a variance depending on local regulations and just current practice from one area of the world to another. And so this aims to get a sort of a level playing field on what's disclosed around the non-GAAP that are included. So those were the aspects that I wanted to highlight in terms of why we're approaching this in the project, what the disclosures are, and which ones are included and excluded. So be very interested to hear your views on the management performance measure proposals.
Todas las dificultades que tiene, es ideal cuando me van a fiscalizar, no puedo hacer nada.
Felipe, Jose, any question?
Well,
one question. Perhaps, in my opinion, perhaps the most difficult topic in this exposure draft is the performance indicators. I hope that everybody will understand what is required and everybody will be able to provide this information. But this is the most new requirement that I can see. The others are not easy, not difficult, but this will be very subjective. It's just a comment. Hello?
Okay, thank you.
Yeah, I corroborate with Philippe's view on that, and it will be, of course, very challenging, and mainly because if you look into, we discussed that many times, there is not a consistent view on what is EBITDA, for example. And I think with those disclosures, and we have an opportunity to reduce diversity, and I hope, and I think the document is clear about that. And the other challenge is how to reconcile MTM and with segment reporting, and I think is something that is quite straight to think how we are going to do that, and so I'd like to have your view, your comment, and so it can help us to think better on that. And basically this, I think the most relevant ones. Of course, if we think on the usual accounting that we are used to, it will be a significant change, and for us. So and again, we are back into the subtotals and totals, and how we are going to fit that in our legislation. But it's something that we are evolving, we are discussing, but these are some initial impressions.
Great. So I think I'd like to react if I can to the. I'm sure Ida will have some further thoughts, but on the first point about being diverse, not having consistent views, and I must say I'm a little bit surprised about the comment about them being difficult to apply. I hope that it's clear what is required. And I think if I go in terms of what the disclosures are that are required, because it's management's view, it is a measure that's meant to be subjective. And I think, as Aida mentioned earlier on, we're looking at this as a package of proposals. And so where we're looking to get that consistency or comparability in the measures is in the subtotals, which are in the statement of profit and loss, with the disaggregation proposals. And then as management it prepares or restricted, if you will, by those, this is the opportunity then to explain their point of view. And then the disclosures that go around that are meant to ensure that that explanation is clear. So when you talk about, for example, that there isn't a consistent definition of EBITDA, for example, this is the intent of this is to ensure that the company then explains how they use EBITDA, how they calculate that, and to reconcile it back to the measures that are defined and consistent, so it can be then compared back across. So it is meant to be a management view. It is meant to be subjective from that perspective. But that reconciliation and the suite of explanations around it is meant to give the transparency and the clarity, and then the reconciliation back to give the comparability across entities. I think on the challenge about segment reporting, I mean, the definitions have really been around, are based on an entity level. And so we're really seeing management performance measures as being at the entity level where that might fit into a segment reporting. The exposure draft has contemplated that those disclosures could be done together if that made sense for an entity, but it's not required that they do that, and it's not required to be broken down to the segment level. So hopefully that clarifies that. We don't think that there's necessarily a challenge there. If entities wish to go further and to try and reconcile at that level, they would certainly be able to, and that's sort of allowed for, but they're not required to do that. And then I think the last part about that you've mentioned, so that it's sort of not the usual accounting as we see it. That's certainly true, but I think we all can appreciate that many entities today use non-GAAP measures. They are out there. Many regulators are trying to input guidance around these measures. And I said this is what the board could do within the remit of what they can do within proposals to try and move those things forward, as I said, in terms of getting the transparency with the disclosures. And so that's really what's trying to be achieved. So I think those were the bits that I wanted to respond to. I don't know if you had anything you wanted to add.
Thanks, Nick. I think you addressed all the points. I just wanted to highlight that companies do not have to have management performance measures. So the idea of the proposal is to bring transparency and discipline to information company already uses to communicate with investors, and that is not IFRS specified. But this doesn't pose a burden for companies to suddenly come up with some adjusted measures just because they have opportunity to do so. And we might even see reduction in non-GAAP compared to what is today because of these additional defined subtotals. So we have seen companies, for example, in our field work, they have their own version of management performance measure or APM today that's quite close to one of the subtotals the board is proposing, and then they are having discussions internally. Is it worth us still having this adjusted measure of performance if the difference is quite small? And these are, I imagine, the process that companies will go through, and we might even see reduction non-GAAP. I think to your comment on EBITDA, the board is proposing to define operating profit before depreciation and amortization as IFRS specified subtotal. We think even though this doesn't say everybody who uses EBITDA has to define it in this way, we hope this will help get greater transparency, because if you are then using EBITDA that's different to this measure, then you would probably reconcile it to this operating profit before depreciation and amortization being closest comparable subtotal, and then it's quite easy to see then in this reconciliation what is the difference between the EBITDA you are using and EBITDA some other companies are using. And all the regulatory requirements today may require some of these reconciliations. Users tell us that often they are just not provided, or they're not provided in a meaningful way, or it's just difficult to find. So putting this in the financial statements where it's subject to audit, and where investor knows wherever the company is or whoever the regulators is, they'll be able to find this information, is something that users have told us would be hugely valuable to us. But as you mentioned earlier, we need to make sure we work closely with regulators going forward, just to not introduce any unintended consequences. And this is why we had lots of meetings with regulators even before the exposure draft was published, just to try to line it up as much as we could.
Thank you very much.
Thank you very much. Not a question in the chat.
In that case, I'll move quickly to the last, as Aida mentioned, sort of half of the main part of the proposals, and that's to do with the statement of cash flows. And I think the reason we say it's a half is not to say that it's not important, but to sort of manage expectations, if you will, because the board has not gone about a comprehensive overhaul of the statement of cash flows. The measures, the proposals really are targeted at trying to eliminate some diversity that exists today. And so, as I've got on this slide, the two parts of the proposal for the statement of cash flows is to set a single starting point for the indirect reconciliation, so that being operating profit, and that will eliminate some of the reconciling items that happen today, and just get more comparability from one cash flow statement to the next. And then the second is about removing the options for the classification of interest and dividends. And so, as we can see here, for most entities, that will mean that the interest paid and received, the interest paid and the dividends paid will be in financing, and the interest received and dividends received would be in the investing section of the statement of cash flows. And then that far right section there that talks about specifically for banks. So when we talked about those adjustments for banks, the proposals have some adjustments to make sure that if things have been moved into operating profit, for example, the equivalent thing happens in the cash flow statement, so that you don't end up with some differences between the two just as a result of these proposals. And so I've lastly just included here an example of what a control statement under the new proposals might look like. And I might leave it there as I turn it back to you. As I said, the proposals are relatively targeted. And so we would like to hear if you have any questions or comments with respect to those.
Any questions? José Luis?
Not at this time, Jorge.
Thank you. Is it worth just reminding us on the next slide all the different materials we have for the project, and we can show a picture of Nick from the time when we were back in the office pre-corona time. delivering a webinar in our webinar room. So we have a range of these webinars, and as you know, Tadeo has been very active with doing them in Spanish and Portuguese for some aspects of the proposals as well. And then we have our communication package along with our chairman's short video introducing the proposals, so you can get all kind of different questions maybe answered that maybe we haven't touched on today if you need further. But as Tadeo mentioned, we are available if in finalizing comment letter you still want to follow up on some comments or questions or clarify, please don't hesitate to reach out. We'll be happy to do that. And we look forward to reading your comment letter.
Ok. Tadeo, si quieres hacer el cierre técnico.
Pues solo agradecer por la oportunidad, Jorge, por la organización del outreach. Para nosotros es muy importante tener la posibilidad de hacer las preguntas directamente para el staff técnico. Y por eso de todos los directores juntos para hacer las preguntas es muy bueno. Entonces, gracias por su tiempo, por su organización, y gracias por todos por participar.
Un comentario, Tadeu y Jorge, que mencionar que, como bien sabes, Tadeu, tenemos un grupo técnico de trabajo para cada exposure draft del IASB y que están trabajando muy duro, y este tipo de reuniones son muy positivas para nosotros. Muchas gracias.
Gracias a usted.
Sí, continuando en la misma línea que Felipe, los invitamos a quienes se han anotado en este evento para que participen junto con su propio país, con el representante de su país, en el GTT que está discutiendo este documento y que coordina Argentina a través de Hernán Casinelli.
Aló.
Así que a todos, muchas gracias por la presencia. A Nick and Aida Tandeu, thank you very much for your presentation. It was very useful. Bueno, gracias a todos y vamos cerrando. Muy, muy amable.
Hola, ¿cómo estás?
Okay. Thank you, Jorge.
Muchas gracias.
Thank you, Nick. Thank you, Aida.
Muchas gracias.
Gracias.
Bye.
Thank you.
¿Cuántos
Thank you very
años
much.
sin saber de usted? 20. Uy, tanto tiempo.